Hello traders, welcome back. It's me from a financial firm. Today we are looking at the EURUSD. The price is hovering around 1.1880. Yesterday, the pair tested the resistance at 1.1920. Today, it seems to be consolidating just below that level. Let us see what's going on here, and if there are any important levels we should be aware of. So yesterday, I shared with you this chart showing the 4-hour time frame where we have a clear uptrend with higher highs and higher lows. As long as the price stays above the uptrend line, the short-term bias is bullish. In the previous video, I also mentioned this chart showing the daily time frame where we have a clear downtrend with lower highs and lower lows. As long as the price stays below the downtrend line, the long-term bias is bearish. In the very short term, the market is in an uptrend, and in the long run, the market is in a downtrend. So what will happen? Will the bears take over? Will the bulls take over? That depends on which trend is stronger. In other words, it depends on which trend line is stronger. If the uptrend line is stronger, then the bulls will win. If the downtrend line is stronger, then the bears will win. Now the question is, how do we know which trend line is stronger? Very simple, just look at which trend line is wider. In this case, the daily trend line is much wider than the 4-hour trend line. This means that the downtrend is stronger than the uptrend. Therefore, in the long run, we expect the bears to win. What does this mean for our trade? Well, right now we are in an uptrend, so we cannot rule out the possibility of a pullback towards the daily trend line. What's the next support level? It's at 1.1820. This is a very strong support level because it also coincides with the 200-hour moving average. A pullback to this level would be healthy for the market. It would give the bulls a chance to regroup and launch another attack towards the resistance at 1.1920. If the market breaks this resistance, then we can expect a stronger rally towards the next resistance, which is at 1.2010. There is a lot of selling pressure at this level as shown by the huge wick on this candle. If the market breaks this resistance, then we can expect the euro to hit the psychologically important level of 1.20. Now let's look at the 4-hour time frame. We still have a bullish bias as long as the price stays above the uptrend line. However, we are getting close to the resistance at 1.1920. This is a very strong resistance level because it coincides with the neckline of the double top pattern. If the market breaks this resistance, then we can expect the euro to strengthen further towards the next resistance, which is at 1.2010. As you can see, there is a lot of selling pressure at this level as shown by the huge wick on this candle. If the market breaks this resistance, then we can expect the euro to hit the psychologically important level of 1.20. So what should you do? Well, if you are a day trader and you are active on the 4-hour time, then you can consider entering a long position at the current level with a stop loss below the uptrend line and a take profit at 1.1920. If you are a swing trader and you are active on the daily time frame, then you should not enter any new positions right now. You can wait for a pullback towards the support at 1.1820 before entering a long position. In my opinion, this is a very important support level because it also coincides with the 200th-hour moving average. A pullback to this level would be healthy for the market. It would give the bulls a chance to regroup and launch another attack towards the resistance at 1.1920. What about the short-term outlook? Well, as long as the price stays below the daily trend line, the bearish outlook remains intact. If the price breaks this trend line, then we can expect a stronger rally towards the next resistance, which is at 1.1920. Thank you for watching. See you tomorrow.